how does this change your investment policy? Likely from the perspective of we have this demographic bulge moving through the population, and will there be enough people, younger people, if you will, to support the boomers as they age? Some of that's my interpretation, but that's what it looked like the questioner was asking more from a general perspective. I think it's important to note that when you look at the population graph of the United States by age category, it's like a pagoda, if you will. It goes up and then it closes in at the top, but it's not an upside down pyramid. We do have generations behind the boomers that are substantial in size, millennials being chief among them. So we are not in the position of, say, Japan or even China, where they have this exceptionally large elderly population being supported by fewer and fewer younger people. As importantly, when you look at global population statistics, it's a pyramid. It's what you want. You have globally a lot of younger people relative to older people. Now, clearly, there are some huge challenges associated with that in terms of your global relationships, global economics. Where are all the young people? They tend to be in less developed countries, and so perhaps aren't as productive in helping us here in the US. But when we look at Western countries, the US is actually in relatively good shape with regard to the demographic challenges that other developed countries face. And I think a big challenge is, how do we step back, look globally, and take advantage of and provide opportunity for the younger people around the world that will allow us to continue to produce, to continue to have a functioning economy. It won't be without fits and starts. It won't be without challenges. But when I look at global demographics, I'm a lot more sanguine about future prospects than if I look at, say, just the Japanese demographic, which is quite inverted.
John, I want to share one other point that I think impacts every single listener on this conference call, and that is Social Security. There are 4 trustees to the Social Security Trust Fund, and Janet Yellen chairs the trust fund. And every year they send out a report on the health of the Social Security Trust Fund. And recently, the 2023 report was sent out, and 2022's report kind of would take your breath away. Just the situation of the Social Security Trust Fund. Unfortunately, 2023's report was even worse. So previously, they said that the incoming taxes into Social Security would be insufficient to fund Social Security in 2031. Janet Yellen raised that flag a year ago. This year's report said, oops, it's even worse. It's 2030, which just happens to coincide with the end of the baby boomers cycle. The good news is the existing tax base for the foreseeable future will be able to fund 3/4 of the benefit. So it's not like Social Security completely goes away, but there are going to have, we've been kicking the can down the road for a long, long time, but the length of that road is quite a bit shorter now than it was when Reagan instituted the changes of Social Security over time, increasing full retirement age from 65 to 67. And Jason, I want to make sure that we give you a chance to talk from an investment standpoint, what this means, the aging of the population.
Sure, I'll touch on that briefly. So there's kind of 2 lenses that we look at in terms of demographics. John highlighted very well, that structure, that shape of the demographic curve here in the U.S. The first is the economic lens. And I think the economic lens is that the top-heavy baby boomers, if you will, it's a large cohort. That cohort is aging, and we know, as we see this in the study of economics, that as people age and they get into retirement, they typically consume less in the aggregate versus early in their life when they're doing household formation, having kids, and they're in kind of their peak earning years during their career. So with that that graying of the demographic here in the US, there are implications on the economic side, in particular through the labor market, with retirements and trying to the replacement rate of jobs in the labor economy because of the demographic bulge, et cetera. So in economic terms, we think it probably relates to perhaps a structurally lower economic growth rate in the years ahead. Not terrible, but something like we saw in the 2010s, something like a 2% growth rate for the economy because of that slight headwind in demographic terms. For the stock market, and this kind of goes to Doug's question specifically, the good news is, and John mentioned this, there are a couple of large generations behind the baby boomers. The millennials, I think it's a 75 million cohort in size. Gen Z, which is the cohort behind the millennials, is around 72 million last time I looked. Boomers were about 77 million. So these are two very large cohorts that are now just getting into their investment years. It looks and feels very similar to me, as if you go back to the late 1970s and early 1980s, when the baby boomers were just getting into their careers and starting to invest in the stock market. And that demographic so we have a demographic headwind for the economy, which just slows the growth rate a bit because of consumption in the labor market. But you arguably have a demographic tailwind for the stock market because you have this cohort of two generations behind the boomers that are now getting jobs, they're earning money, they're saving in 401ks and IRAs. And that could be a net positive in the years ahead as we see more of those folks investing in the stock market. So at the end of the day, the stock market is supply and demand like any other market. And I think that's the good news through the lens of investing, is that we have a pretty large demographic that's just getting into their investing years at this time. So that's the way that we think about it.